You are where you are today because of the decisions, good and bad, you made in the past. Decide now what your future will be. And my friends, with us 10 to 15 minutes each and every day, that is all we ask. What could be more important for your financial future than learning how to read the stock charts? Well, I would add to that learning how to invest in real estate. I made a lot of money in real estate. Don't know how long that'll go on with where we are in the world, but that's a good skill set to have. But I'm telling you, what could be more valuable than being able to buy and sell and trade off your computer with a small amount of money, being able to grow it, grow it, grow it? I want you all to have this skill set. And all I ask from you, 10 to 15 minutes every day, devote it, learn what's going on, how to do this. And of course, the biggest thing we talk about over and over and over again is managing what? Your losses. If you will just cut those losses and then let your profits run, everything will be golden. And in fact, I mentioned golden because the training today that's going to be in your show notes for all the subscribers is the golden ticket. I want you to have that golden ticket. I want you to learn how to set these profit and loss bands that you see me popping up on the screen over and over again, 2-to-1 risk to reward ratio. You know from the always successful formula that we have, you only have to win 4 out of 10 times if you manage your losses and let your gains go. 2-to-1, 2-to-1. Come on, you can do this, guys. Now, let's see what's going on in these markets. Bloodbath, my friends. Everything down for the day. The least downer is gold at 0.01%, but boy, it goes up from there. The biggest downer for the day is the NASDAQ 100, down an additional 4.5%. Now, earlier in the week when I told you where the NASDAQ was, it was down 21.23%. Guess you can add a little bit to that. Now, what about the S&P 500? It was down 3.7%. And when I gave you that number earlier in the week, it was already down 14.47, so it's even a lower low. So I guess we're pushing, maybe around 16 down for the S&P and 24% down for the NASDAQ for the year. Insane, my friends. Insane. Aren't you glad you're following the charts with us and you have seen what's happening? Now, let's talk about where things are right now. We can see on our half-day chart down in the morning, further down in the afternoon, we're below the 200 EMA. And remember, when we're below the 200 EMA, we're looking for short positions. When we're above the 200 EMA, we're looking for long positions. And this is on the 195-minute chart. We can see from our success multiplier formula, we are and have been at negative 15. That's why we jumped in this initial trade 2-to-1 based upon the average true range ratio we set up. We were willing to take a loss of 1.63% in order to earn 3.24%. That short position worked right away. Could we have stayed in longer? Yes, you could. In fact, you could have continued to stay in with those red down candles, not sensing any danger. You saw a couple of up candles here. You could have stayed in and continued to ride it down, maybe popped out here, maybe just stayed the course because your STC continued down. That is all based upon your skill set and training, how well you understand what's going on, and something for you to strive for in the future. But what about just capturing down 3.24%? How could you have done that? Well, of course, with something like SH. You might say, Tom, what is SH? Well, we talked about that earlier in the week, and I put out the training on it for you. It is something called the ProShares Short S&P 500. It goes up at the same percentage that the S&P goes down. It's an inverse fund. And look, it only cost $14, $15 a share. Isn't it beautiful? Now, there are problems with it. What are those problems related to? Well, high expenses and the fact that it's revalued quite often. So say it goes up 2% one day. Well, when it goes down the next day 2%, it goes down based upon the new price, which can really sting you with losses. But again, if you're riding this baby up and you know what you're doing, you need to practice trade it to learn. So would encourage you just to think out of the box a little bit. We encourage that a lot here at the show. You don't have to look at the rest of the charts. Why? Because you know that the other two are down from the success multiplier formula. Look at that 2-day jamming down, pushing through the 200 EMA, and look at the weekly. It also is jamming down quite hard there, heading toward that 200 EMA even on the weekly. It's a ways away yet, but things are pushing down. Now we're going to go back to the 195. That is the half day, 195 minutes. What do we see on the Qs? That's the big downer, 4.5%. Whoa. You want to talk about some bleeding in the tech sector? Boom, you can almost hear the screams and shouts. What's going on the 2-day? Well, you can actually tell, again, it's negative 15.2 on the success multiplier formula. Things are jamming down there, and they're jamming down hard on the weekly. So that is where we are, folks, on stocks. The blood is in the streets. They say a recession is coming. Coming? Well, what do we see going on 20-year bonds? We start off on the 195-minute chart. You can see bonds have been going down for a while over the last few days. Don't have a rotation over yet on the 195-minute chart, but you might say, well, the only thing that is not getting us in is the fact that it's not rotated over yet. As you look at the success multiplier formula, it's minus 14. So again, we're waiting for this to cross over going down so we can jump in. You can see we're well below the 200 EMA. We go to the 2-day. You can see that the 2-day, again, is pushing down quite strongly. Part of the reason probably things have not crossed over on that half-day chart on the STC is because we've not reached a lower low. Things bumped up and then down on this latest candle. What do we see on the weekly? You can see there too, we've not hit the lower low. So when it starts getting close to that, if indeed it does, that may be when you see the opportunity to jump into another potential short position on 20-year bonds. And again, how could you do that? Well, you could, of course, look to buy puts in a practice trade, or you could go to TBF. That is the short fund for 20-year bonds. Tango, Bravo, Foxtrot, for all us military types. What do we see there? It's going up as bonds are crashing and burning. So again, just another little tip to think out of the box. Let's go now to gold, the only bright spot in the day. A bright spot, I guess, being down just 0.01% is the bright spot. But it is bouncing off the 200 EMA, which is nice. Up in the morning, lost some of it in the afternoon. But we still, of course, see gold negative. It's at a 0 right there. We look at the 2-day, it's negative, and the weekly, it's negative. In fact, weekly vertical crossover going down on gold after this big negative week. So we'll continue to keep our eye on gold. Maybe this bounce off is going to give us an opportunity, if it gets some legs on it, to maybe jump in. Maybe we'll see a red to green. I've had gold marked, watching for a rotation over the last many days after that successful gold trade that we had up 2.03% and out that we previously had. So again, hit that 2-to-1 risk to reward ratio quite nicely on the reward side back in, what was that, early to mid-April. Waiting for another opportunity. My friends, be patient. Don't put a bullet in your own head. Okay, that's where we are on gold. Lastly, we go to Bitcoin. Bitcoin not down quite as much as the Qs, but close, 4.40%. And of course, what did we see happen? We were tracking our downplay with a 2-to-1 risk to reward ratio. What happened to us in this? Well, you can see that we turned green and popped up, which would have caused us to do what? Immediately get out of Bitcoin for no loss. But again, once we got that signal that that down trade was not working, then we pulled it. Now, what did Bitcoin do at that point? It then went back to red. Could we have stayed in, willing to take a loss? Yes, we could. That's one reason we have our profit and loss band. So you could have stayed in, being willing to take up to that 4.71% loss when you adjust for that volatility. Again, based on the trainings that we have on how to use the average true range, you learn how to reduce your position size based upon the risk you're taking so that the dollar amount is lower and, again, you don't get yourself killed by what? By the loss. So you could have stayed in, or you could have said, you know, look, it's going green, I'm pulling it, I'll just pull out, let this trade go with no loss. That's fine too, my friends. What we need to do here is always do what? Practice. Learn what your rules are, and there are different ways to employ these rules. Could stay in, be willing to take a loss. My rule pretty much is when I lose my strength in the STC, I have learned by trial and error that when things flip over on me, I don't stay in. I almost never do. There's got to be a really compelling reason. And for me with Bitcoin, with all the volatility I see there, I ain't really excited about staying in. Now, I did have a 15. You know, overall, I mean, you've got a lot of downward pressure on both the weekly and the 2-day, but not me, my friends. I don't want to take a loss. I'll let it go at nothing won, nothing lost when I see things flip over. Then you might say, well, Thom, why wouldn't you jump back in here? I don't jump in until I see things. And again, we talked about this, little bit iffy here. You can see these inner bands. You see this little gray area where you have these two bands here. Those are your inner bands. I don't do any trades typically inside there. That was just on the line. And we looked at that for jumping into a down move with all the strength there. But you can see part of the problem that you get. When you start with a very high, strong down move after a nice high run up and things start to bleed down, pushing through the 200 EMA, which again, we don't quite have it moving out there. We talked about all that back then. The reason, because this actual ETF's only been going since November of last year, so we're just now getting the 200 EMA. But we can look at Bitcoin itself on the Bitcoin exchanges and see where we were, and we did, and we saw we were pushing through that, so we jumped in. But I like it when it starts much higher up, not just at that middle band. I don't like that. So again, these are things you learn by doing, and you learn it specific to particular charts, because every chart's like a little child. They all have their own personalities, and you have to pay attention to them. Otherwise, they will start crying, and sometimes they will bite you and draw blood. So that's where we are on Bitcoin. We saw things go up into green a little bit, and then back to red, back to a 15, 2-day heading down, weekly heading down, and again, Bitcoin bleeding out just like everybody else. Tough market, tough times, but if you have the skill set, my friends, and know how to go short, hey, you can make money in any season. You just need good charts to follow, and you need good charting skills, and that's what we want you to learn here. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters. By the way, I'm actually going over to England to see some of our British friends this next week. I will be flying out of the country Tuesday. Going to try to knock out the training for you guys in one of the airports before I go. It's going to be hard for me to get to you on Wednesday, Thursday, and Friday of next week. I'm going to give it a shot. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.